Alright, so today I will discuss IAS 38 intangible assets. There are many types of assets. You can say that assets, tangible assets, intangible assets. What are tangible assets and what are intangible assets? So in today's video, we're gonna start to discuss intangible assets. First of all, we would just watch the history of this standard from the very start up to now. In April 2001, the International Accounting Standards Board adopted IAS 38 Intangible Assets, which had originally been issued by the International Accounting Standard Committee in September 1998. The standard was originally issued by uh, International Accounting Standard Committee in 1998, September 1998, but later on it was adopted by the International Accounting Standard Board in April 2001. The standard had replaced IAS International Accounting Standard 9 Research and Development Cost, which had been issued in 1993, which itself replaced an earlier version called Accounting for Research and Development Activities that has been issued in July 1978. The board revised IAS 38 in March 2004 as part of the first phase of its business combination project. In January 2008, the board amended IAS 38 again as part of the second phase of its business combination project. The board revised IAS 38 in March 2004 as part of the first phase of the business combination project. Um, Alright, so in May 2014, the board amended IAS 38 to clarify when the use of the revenue-based amortization method is appropriate. Other standards have made minor consequential amendments to IAS 38. They include IFRS 10 consolidated financial statement issued May 2011, IFRS 11 joint arrangements issued May 2011, IFRS 13 fair value measurement issued May 2011, annual improvements to IFRS 2010 and 2012 cycle issued December 2013, IFRS 15 revenues from contracts with customer issued May 2014, IFRS 16 leases issued January 2016, IFRS 17 insurance contracts issued May 2017, amendments to references to the conceptual framework of IFRS standard issued March 2018, and amendments of IFRS 17 issued June 2020. Now, summary of IAS 38. Now we are going to learn about IAS 38 intangible assets, the definition of the intangible assets, and the accounting of the intangible assets. IAS 38 sets out the criteria for recognizing and measuring intangible assets and require disclosure about them. An intangible asset is identifiable non-monetary assets. You have to notice that uh, intangible assets are not monetary assets without physical substances. Such as assets is identifiable when it is separate, or when it derives from contractual or other legal rights. Separable assets can be sold, transferred, licensed, etc. Example of intangible assets include computer software, licensed trademark. Now these are the examples: patents, firms, copyrights, and import quotas. Goodwill acquired in a business combination is accounted for its accordance with IFRS 3 and is outside the scope of IAS 38. Internally generated goodwill is within the scope of IAS 38 but is not recognized as an asset because it is not an identifiable resource. Expenditure for intangible assets items is recognized as an expense unless the item meets the definition of the intangible assets and it is probable that there will be future economic benefit from the asset and the cost of the asset can be reliably measured. This is the definition of asset. Right. The cost of generating an intangible asset internally is often difficult to distinguish from the cost of maintaining or enhancing the entity's operations or goodwill. For this reason, internally generated brands mastheads, publishing titles, customer list, and similar items are not re uh, recognized as intangible assets. The cost of generating other internal generated intangible assets are classified into whether they arise in the research phase or the development phase. Research expenditure is recognized as an expense, and development expenditure that meets specified area criteria is recognized as the cost of the intangible assets. Intangible assets are measured initially at cost. This is very important sentence over here, that intangible assets are measured initially at cost. After initial recognition, an entity usually measures the intangible assets at cost less the accumulated amortization, because intangible assets can be amortized, but uh, tangible assets can be depreciated. It may choose to measure the assets at fair value in rare cases when fair value can be determined by reference to active market. An intangible asset with a finite useful life is amortized and is subject to impairment testing. An intangible asset with indefinite useful life is not amortized but is tested annually for impairment. When an intangible asset is disposed of, the gain or loss on disposal is included in the profit or loss. And one thing more interesting is that IAS 38 intangible assets, tax credits, and tax concessions, tax exemptions is also allowed and intangible assets. Intangible assets, the amortization and the depreciation which occur in the both tangible and intangible assets can be deducted from the income tax from business. The income from the business you can deduct, you can minus, you can subtract the amortization or depreciation cost from the income from business, and that will be benefited for the businessman to deduct lesser tax. Thank you for watching, and thank you.